Alrighty traders, this is John Howell here. Welcome to today's coaching video. In today's coaching video, I want to give you an update on what's going on with the markets right now and why the pullback has been happening. Have you seen the Dow Jones as of late, right? We're getting that really big pullback, and for the last week I've been actually really bearish, saying we're getting ready for this drop in the markets from here. So that's what I want to share with you. Plus also I want to share with you some things you can look out for on the chart. Some things that I use on the chart to show me that this move that we saw is probably going to fail, and the reason why we're probably getting this drop. I'm going to show you how this slowing momentum, I'm going to show you that in the markets and some really big key levels there. I'm also going to walk you through some of the mining sector. Even though we may get a drop in some of the mining sector stocks like the GDX, there could be a really big breakout coming soon in the actual mining sector. And then guys, I want to finish off with showing you this, or showing you a simple pattern you can look out for that is really high probability, that gives you the odds of you actually doing really well on your side. So let's get straight into it, guys. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into the update today. So the first thing I want to share with you guys is I've been trading the markets for 20 years, okay? And one of the things that I'm always learning, or one thing that I always know is, no one definitely knows what's going to happen. And that's the reason why it's important not to use external things like news and fundamentals and so on and so forth to make trading decisions, because it's not going to really serve you right. It's important to utilize things that can really help you get a gauge on what's going on in the markets. And so the big thing that I really want to show you here is, I'm going to start off with the Dow Jones. As you can see, the Dow Jones has been having a really big drop through here. Now, as you know, for the last probably, maybe a few weeks now, I've been saying false breakouts, here comes the drop, right? Like you've been seeing me do those. If you've been watching me for the last few weeks, you've been seeing me talk about, the everything drop coming, right? And that's actually what's happening, is that the top and the drop is actually happening right now. So the big thing about the Dow Jones is, if you have a look at the Dow Jones, one of the things that I like to use is on the daily chart anyway, is a 52 moving average. And I use the 52 moving average in a gauge of telling me where is momentum. And there's one particular pattern that I see that happens in the market, that most of the time it tells me that this is the end of that bull move, right? An end of a bull move, and we're likely to start to get a lot of volatility or even a bit of a pullback. And so let me show you this here. So one of the things that I'm always looking out for is, let me actually bring this up here, is that I notice this here, right? If I look at the 52 moving average, just one moving average, if I look at that, I use that as a gauge of where is momentum. Is momentum flat? Is momentum strong, right? There's always these different things that I'm utilizing with the markets here. But to me, trading is about pattern recognition, isn't it? It's about understanding the different patterns out there to really give us a good gauge. I'm like, okay, I'm trying to understand, like, the market's actually breaking up to a new high, which the Dow Jones did, right? It broke up to 40,000. It's breaking up to a new high, but is this a real breakout? Is it really going to follow through now? Or is this likely to be a false breakout? And so I'm always utilizing patterns, different things in the market to give me a gauge on what's going on in the market. And one of those things for me is the moving average. And so the moving average for me is, again, once I see this pattern, right? If you have a moving average that looks like that, that means I look at that as a strong momentum. But if the moving average goes like that, but then it starts to flatten out like that, guess what? This is now, it went from strong here, strong, to slowing / weak through here, right? And then we end up doing that. Now, what does that mean? This is the moving average here, right? This is the 52 moving average. What I utilize that is that if we get that, and also the market's trying to go for another move, it tells me that the momentum in the current market is probably going to fail, because it's the end of this bull move. It's not the start of a new big bull move. So as you can see here, that one of the reasons why I've been calling for a drop in the markets is this. The 52 moving average went up strong, right? So we had a very strong bull move through here. Now look what's been happening to the moving average. What? The moving average is starting to flatten out. Now that was the moving average, but look what the market did, right? The market had a pullback and it tried to go for a big move, but it failed. Why did it fail? Because it's now towards the end of a big bull move and it needs more time to rest, reset. And so we're probably going into a period right now, guys, where there's a lot of weakness that's probably going to start to hit the markets. And the Dow Jones is just that first sign of what's happening right now. Now we're starting to get that false breakout happening on the S&P. I'll get to that in just a minute. But here's this one pattern that I like to see. Again, guys, I'm all that pattern recognition, right? If I see the moving average has been going strong for a while, like through here, and then suddenly we start to flatten out, and then the market tries to go for another move like here, it's probably telling you that this is probably going to be that's that sucker rally, the sucker rally in the markets before we actually see the drop, right? So that's the thing there. But you also get the moving average does a couple of different patterns towards the end of bull moves, which sucks a lot of people in. The first one is the market goes up and then flattens, or it goes up and then it slowly goes up, right? So we have a strong, now this is more like the moving average, the angle of the moving average, right? So I'm sharing with you how I look at the moving average to tell me what's happening here. Are we at the start of a very big bull move, or are we starting to slow down, right? And if we're starting to slow down, you don't want to be getting into a move. You don't want to be getting into the market, right? When the overall momentum is starting to slow down, right? What do we want to do? We want to get into the market when the market's just starting to pick up, right? Give us the best chance of us doing really well out there, right? And again, that first link in the description there, guys, join my webinar that I'm running today, and I will teach you all my details to my trading system, and you'll see the reasons why this 52 moving average is so important, what I look for. This is rule number 2 in my trading system, and how I utilize this to help me give me the best chances of actually doing well out of the markets, right? Because trading is a difficult thing, right? Trading is a hard thing. Let's not sugarcoat this. So it's important that we utilize different patterns to help us give us the best chances of actually having a successful year. Make sense, guys? So that first link in the description there. So there's that there. So if the market's been going up, we get strong momentum, but then we're starting to slow down. Would you want to try to go long here in the markets? Now again, this is the moving average. If the momentum was strong, but now it's starting to slow down, would you want to go long? You wouldn't, right? You wouldn't want to go long. Why? Because the market is starting to really slow down from there. So, and so therefore you can see if the reason why I'm bringing that up is because we see it like on the Nasdaq. Look at the Nasdaq here. See the Nasdaq? So the Nasdaq did what? The Nasdaq went strong up, and see that move through there. So that's the reason why the Nasdaq is starting to fail right now. If you look at the S&P 500, look at what's the S&P 500 doing. Why did the S&P 500 create a false breakout up here? So if I bring it up very, very closely, why is this starting to create a false breakout? This is the short-term picture, right? Why is this creating a false breakout now? It just ran up to a new high, right? Why is that? If we have a look at this here, if we go back to 1 year with the data, what do we see through here, right? We see what? We see a big move up. And now look what's happening, right? See how see the angle is different. This is strong momentum. Now we're starting to what? Go weak, or it's starting to slow down, right? This is like you jumping in a car, right? And you wanting to go for a really long trip in the markets. What you want to do is you want to get in as the trip is just getting started, right? If the car is here, what the car's doing, right? The car's got a full tank of fuel. But if it's used all this energy, what this here is, this is like the last quarter tank of the car before what? Before we actually have to go refuel again. That's what this is all about, right? We used a lot of energy. We're starting to slow down now, right? Why are we slowing down? Oh, okay, we're starting to run out of fuel. We need to go refuel again before we get to go again. What does that mean in the market terms? The market terms simply means that as the market has been going up, the reason why we're failing through here is because we're getting this moving average here is saying we're starting to get towards the end of this overall big move up, and we're using that last little bit of fuel, right, through there, and then now we need a time to go refuel. Now, what does that mean to the markets? The markets go through these phases, right? We go up, we go down, we go up, we go sideways, and we go up, right? I call these the refueling phases, right? We've gone up, we've used all the energy in the car. Now we need to go refuel it again to go for another move. Refuel it again to go for another move. Makes sense? So we this was the refueling phase, which wasn't a lot before we actually broke to the upside. So I hope that makes sense there. The reason why, and again, this is, again, for me traders, it's all about pattern recognition, right? And so this is what I'm not trying to be smart, right? I'm not trying to like guess. I'm just using the patterns that I see in the markets that cause me to say, okay, look, this is what's happening, right? You even saw it back here. If you go back here in the Dow Jones, look at the back here. We went from what? We went strong. So you see how the moving average was strong? What happened? See the moving average through there? Why did the moving average what? The moving average started to slow down there, didn't it? It started to slow down. So what did that mean? Oh, now look what happened, right? We started to what? We started to get this overall big drop through here. Why? Especially when you started to see the moving average, right? The moving average started to slow down through there. So that's a big key through there, guys. So what we're seeing right now is we're getting a false breakout. So I would not be too surprised, guys, to now start to see that this is the start of a much bigger drop. The Dow Jones has already been leading that way. And the Nasdaq and the S&P is just starting to get this false breakout. So I wouldn't be too surprised, guys, to see now June and July are probably going to be very weak months, and we're going to start to get a lot of people freaking out and so on and so forth. So that's what I'm seeing through there, guys, when it comes to the stock market. Let's go look at the gold market through here, right? So the gold market is probably giving us like a bit of a double top formation through here. So we can see this low and high low through here, right? So we're getting this double top formation in the markets from here. And so we can see that through here, right? Up and then down and back up. And then now we're just going sideways through here. So the really big key here, right, is what? Remember I said before, if you think about the market like an energy source, okay? Or like a car analogy, right? The car is refueling. And remember I said before, right, this is the reason why gold had such a big move. Right, and I go back to this here, but why did gold have such a big move here? Because it went through one of those refueling phases. Remember I said before when I drew that diagram for you, right? When the market goes up and then we go sideways and we go up when we do these things. This is when, especially when we get a long extended period of sideways and the overall trend is making low, higher low, and higher low. Then this refueling phase through here, which is just going sideways, is telling us we're getting ready. We're refueling a lot, so we're spending a lot of time going sideways to go for another big move. That's the reason why this hasn't worked out, because we used a lot of energy. We had just a little bit of a drop, and then now we try to go for another move again, and now we're getting this false breakout. So the gold is creating a very similar effect to all the markets out there, right? All the markets out there. So that's what I'm seeing through there, guys, when it comes to that on the gold market. I'm expecting a lot more weakness across all markets, guys. So that's that through there. And same for silver as well too. Silver, we're not at a stage where we want to go for another big move yet. We're probably going to go sideways for a bit, maybe even go sideways towards this trend line through here, guys. So all through there, we're probably going to see a sideways movement all through there, and then maybe we go for another move as well too. So that's what I'm seeing through there when it comes to the gold market. Now let's go look at one of the things I promised you is look at this here. So this is the GDX market, okay? So the gold mining sector. And the big thing about the mining sector, look at this here. So the big thing about the mining sector is we've had this very, very, very big move to the upside, okay? Very big move to the upside. And now, guess what? We've used a lot of energy. Now we're probably going to go what? Probably going to go through this sort of phase through here, right? Which is going to be this sort of thing in the markets right now. And the reason why we're probably likely to get that is, guess what? We're probably likely to get that because looking at that, we can see how we can see that through there, right? So it's probably just it's a nice up move, and now we're probably going to start to see a move down through here. Now the big thing I'm seeing through there is, check this out. If we go to our weekly charts through here, look where we are right now. This is the small picture there is what we're probably likely to get a bit of a drop because we've already seen a lot of move to the upside. And again, the rhythm of a market is what? We go up for a period of time, right? So we'll go up for a period of time, and there comes to a point in time where we either get a bit of a pullback like this here, and continue the upward trend, or we go sideways and then continue the upward trend. Because we've gone up for quite a period of time, we're probably likely to get a bit of a drop down to here and then maybe continue that trend, right? So this drop here that might last for another month, might last for the next month, is probably likely to get to a point where it's probably likely to come back down to this next support level around that 32 level and then break out. Now, if we do get something like this, guys, and we start to break above this 35, 36 level, that's going to be really powerful. Why? Now, this is the big picture. Look at this long-term trend line through here, right? Massive long-term trend line, and then we have this point all through here. So if we do start to get that, what I shared with you before, right, where we get this drop down through here. Now this is a weekly chart, by the way, guys, and we start to get something like that. That's going to break out of this pattern through here. That's going to be really, really, really powerful, because if it does break, then we could start to see the mining sector start to go for a really, really big move, right? So that's what I want to share with you in today's update there, guys. Now, what I want to do is I want to share with you, for me, guys, again, trading successfully for me is not trying to be smart. Now, what I mean by that is I'm not trying to say, well, the unemployment and this and that, and I'm not trying to be smart. I'm just trying to say, okay, what are the type of patterns that I see that work, most of the time? And then I want to I just want to try to focus on those types of patterns, right? I'm not trying to guess. I'm like, what are those patterns? Instead of trying to be smart or try to guess, I'm like, okay, these are the type of patterns. And one of the type of patterns that I like to see is always a sideways or a pullback to the 52 moving average, or at least to the moving average, right? And so you can see here, right, you can see the moving average. So the moving average has been trending down, right? So I'm always looking for the moving average to be trending in my direction, whether it's up or down. If I'm looking for a bearish trade, then obviously we're looking for downside. Looking for bullish trade, trending an upside. And what I'm looking for is I'm just looking for a period. So as you can see, I'll start with this one back here. See how this was what? Sideways to the moving average, and then we got the breakdown, and then we had a follow through. Now, guys, this is trading the markets. We're looking for opportunities to give us a good chance of what? Making a profit out of the markets, right? So what are those types of patterns out there that can give you the best chances? And if we can stop ourselves from trying to trade every little thing that moves, right? We're trying to pick tops, trying to pick bottoms, trying to trade this pattern and that pattern, and using all these different indicators. If we can just bring it back to say, then what are the patterns that work most of the time? And so we can just focus on those patterns, right? Because remember, guys, trading is a hard thing, and we need to put all the odds on our side of doing really well. And for me, as the market goes throughout the entire year, that there's a lot of different things that are going to happen in the markets, right? Markets go up, markets go down, different fundamental news and all that sort of stuff. But if I can bring it back to simple analysis of, and again, this is what I share on the webinar here, on that first link in the description there, guys. And if you're interested in actually becoming a private client of mine, where you're with me every single day, where you're with me and you're part of a really good small group of 10 to 15 people every day, where you see me do my trading and I'm there coaching you every day, and you're part of a like-minded group, and you're not feeling alone, and you really need that hand holding because you've been struggling this year, then that second link in the description there, guys, click on that, go fill out the application form, and I will personally call you to see if you're a good fit and talk to you about that. I think I've got 2 spots left open, guys, from that there. So again, second link in the description, click on that, go fill out that. The coaching program is all about being with you every single day, right? Because trading is a hard thing. Trading can be a lonely thing. And if you're getting coaching from me for 20 years, plus also part of a like-minded group where you're not feeling alone, then you can really, really, really start to get ahead a lot, right? So anyway, the second link in the description there, guys, fill out the application form and I'll personally call you to see if you're a good fit from there. So you can see that through there, right? So I'm always looking for a pullback with small bars to a strong moving average. See this through here? What was that? That was just a sideways movement with small bars to a strong moving average. And then we get some sort of breakaway bar. The strong moving average coming down, we get this pullback here with small bars. See all the small bars? And then we get this large bar, and it's a nice good bearish trade. Strong moving average, small bars, and then what? Large bar from there. Right? So you start to see these patterns that form again and again and again, right? Because again, I'm all about, to become successful, as the market moves up and down and does all these different patterns and boom markets and bull markets and sideways consolidation, I'm like, okay, what is a pattern that I can believe in? And one of the, and this is here, right? Strong up, sideways, and then we get a big move again for trading opportunity. What is trading? Trading is holding it for a few days, maybe up to a few weeks or more, right? And so look at this here, down, sideways with small bars, and then we get the breakdown bar from there, right? And so you can see, like, I've got like a lot of different screenshots here, guys, that I take, and different trades and stuff like that I've done in the past. But look at this here, right? Look at this here. So if we have a look at, so like even this one here, right? So if you're using, when I'm trading intraday charts, guys, so such as the hourly charts, I recommend for my private clients anyway, I recommend then using the 24 moving average. I use the 52 moving average on the daily charts. It's just a simple moving average. And I use a 24 moving average on the hourly charts. And the reason why is I've just found it to be that there, right? But what is the most important thing? The most important thing to me is I'm looking for a sideways period with small bars with a strong moving average, right? So you can see through here. Look at this here, sideways with small bars, strong moving average, and it was a very good bullish move. Sideways, small bars, strong moving average, and a good bullish move. So you look at this here, sideways, small bars, strong moving average. Like these are different examples, sideways, sideways. You can see what I'm saying here, right? Like whenever you, these are the patterns that repeat, that give you, that I found that have a really massive high probability. Now, obviously, guys, I'm just sharing with you one of the rules that I look for, right? I look for 4 or 5 main rules whenever identifying these patterns here. But this is like whenever I get that sideways period, what am I doing? I'm identifying the patterns that have a refueling. Like this is the market refueling, right? This market's burning a lot of energy, refueling the car, and getting ready to go again. So there we go, traders. Hope this really helped you out. Have an amazing day, guys.